Hello and welcome to Trading Hour. I'm Reema Tendulkar. With me is Hormuz Fatakia, and we can't still quite get over that win, right? World champions, India. Truly a moment of pride.
We waited 11 years, so I guess 11 days of celebration is still worth it, I guess, and 11 days or even more. And it was 13 years, 11 years for a ICC trophy, 13 years for a World Cup. It's plenty of years. It's almost over a decade of waiting that has come to an end for fans like us. And for that absolutely hopeless situation that the match was once in, to come back from that kind of a situation and win,
unbelievable.
That just makes it even more special, isn't it? And yeah, it's for that, the kind of celebrations that you've seen on the streets from fans across the country, across the world as well. You're seeing some videos on social media where there was a fan park organized in New York where there were people who were shouting and you were chanting. So it's an incredible moment for all of Indian cricket fans. But we are back
to the markets then. And you know, today is so much, Hormuz, about the IT sector. So while the Nifty and the sensex are consolidating with a positive buys, it's a gain of close to about 0.3%. The sector which is topping the chart is Nifty IT. The Nifty IT index is a gain of 1.8%. And this was a big laggard sector. Year to date, the Nifty IT index is only up 3%, while the benchmark index is up 10.5%. And all those IT gains have only come in the month of June. So in June, the Nifty IT index is a gain of close to about, or in the last 1 month, including today, it has a gain of nearly 6.5%. And it's interesting, these gains are coming just in the run-up ahead of the earnings. One, there is expectation of a growth recovery. Earnings got derated, PE valuation multiples climbed down in Q3 and Q4, but now there is expectation that things will recover, and even Accenture provided that bit of a fillip. That's the earnings calendar. It starts next week with TCS and HCL Tech, and then the following week you've got LTI Mindtree, you've got Infosys, and then it ends with Tech Mahindra on the 25th. But so IT takes center stage today. Auto sales continue. So M&M's auto sales numbers are lower than what the street was anticipating. A number sub 70,000 units versus expectations of 72,500 units. The stock is sticking lower, down close to about 0.25%. But Bajaj Auto is in the green. Hero MotoCorp awaiting numbers, but there is a price hike, and Hero MotoCorp is seeing some buying today. And HDFC Bank, while the Nifty Bank is not doing too much, HDFC Bank is providing support. And on the way down, you've got cuts in power names. So I think NTPC Power Grid are the top two Nifty losers.
3 out of the top 5 gainers on the Nifty are IT stocks. Yeah. So yes, it is taking center stage indeed. Are these IT names, and a double upgrade coming in for Wipro as well from CLSA. So good going for IT stocks. They will continue to hog the limelight, if I can say that, over the next couple of weeks as earnings season begins, as Reema was just mentioning on the calendar. The advance decline ratio still firmly in favor of the advances, but good going there. But what is also doing well in today's session are metal stocks, and the metal stocks were supposed to be in focus considering the data that has emerged out of China, with the economy being in contraction for the second month in a row, and with all that cues coming in from China. But the metal sector is holding on and doing well for itself. Tata Steel but trading higher by about 1%, as is JSW Steel, now closing in on that mark of 950. So overall, a good day for the markets. It's been a steady start to the new month and the new week as well. But starting off with some important news updates, a week after SEBI green flagged Ola Electric's IPO, Bhavish Aggarwal, the company's chairman and managing director, tells CNBC-TV18 that the EV maker is keen to go public at the earliest possible and will list on the bourses in 2024. Now, dismissing any concerns on the valuation, Aggarwal told CNBC-TV18's Ritu Singh that the conversation with investors has been encouraging, adding that Ola is the price leader in the market and on the path to profitability, with its two-wheeler sales continuing to grow with or without the FAME subsidy. Listen into a slice of that conversation.
We actually began work on our cell program 4 years back, and you saw today the Battery Innovation Center, you saw the Gigafactory. We've been investing in this because we believe the way to build the future of EV in India is to really build the core technology in India. The lithium, and in the EV world, that's the lithium cell. So you need to build the lithium cell in India, and the technology as well as the manufacturing. Yeah. And we have been the largest recipients of government PLI. We got 20 gigawatt hour allocation. Yeah. And we are building our factory in multiple phases. Yeah. Phase 1, which you saw today, is 5 gigawatt hour, out of which phase 1A is 1.5, which is actually, all the installation is complete. We've begun the trial production. Now, the cell production goes through multiple phases. It's a fairly complex thing to make.
Yeah, you saw today.
Yeah, you saw today. So we're being very methodical about how we go about it. The first step is the trial production, which commenced a few months back. We also, just a few days back, got our BIS certification, which is again a very major milestone in the evolution of using our own cell in our own vehicles. We do have a schedule of a few months, 6 to 9 months of more rigorous testing in the Gigafactory. And then sometime early next year, we will be able to see our cell in our own products.
And as you scale that further, do you already have plans to supply it to other players, maybe non-auto players as well?
Absolutely, Ritu. So I think, like I said, the cell is going to be a very important part of India's energy transition, and cell technology and the lithium cell supply chains. And since we are at the forefront of this investment and change in India, we definitely will be supplying to ourselves. And as we get towards the 5 gigawatt-hour capacity, and simple math says that if one two-wheeler takes about 3 kilowatt-hour, a million takes 3 gigawatt-hour. So with 5, you can easily serve 1.5 to 2 million two-wheelers, or some four-wheelers, three-wheelers, etc. So we do plan to serve other automotive companies in India and globally, and we are in exploratory talks with a few customers.
All right, we'll wait to hear more on that. But what we recently did here is SEBI's green flag for your Ola Electric IPO. Just give us a broad sense of the timelines that you're working with, because this is one big milestone that has been crossed off.
We can't talk about the specific timelines, Ritu, but we had filed our book in December, late December, and SEBI has given us the final observations, and we are working through them. There are still a few process loops to get through over the next few weeks or months. And as we get through them, we are quite keen that the markets get to see us as soon as we get through the processes.
Which would be this year? Would be
definitely this year, but exactly when, again, it depends on the process.
You know, a lot has been said, even though it's not been publicly disclosed yet, about the kind of valuation that you're seeking in this IPO. Now, reports suggest it could be, anywhere between $7 to $10 billion. I just wanted to get a sense of how you see this. What the feedback from investors has been like so far.
We've had very good conversations with the investors across the board. Our conversations are not about the valuation per se. It's about the business we are building, the kind of scale. And, these are all public data. If you see how we've grown in our monthly sales over the last 12 to 24 months, it shows how India is adopting EVs so quickly. And the Vahan portal tells you our monthly numbers. Yes. So I wouldn't want to comment on valuation, but our interactions with investors has been very encouraging.
Well, I'll get to the Vahan portal numbers in just a bit, but the other thing, that assumes importance as a company goes public is profitability, or at least a path to it. Yeah. We didn't get much of a picture in your DRHP because, of course, in your risk statement you said there's no visibility on when that may happen. If you could give us a broad sense of how soon you see that, given the kind of volumes you've been clocking, more than 3 lakh sales in the last fiscal.
In our DRHP, you had numbers till June, and over the last 2 to 3 years, you could have seen our gross margins were improving as our scale was improving. All this is from the book. And since June till now, it's been about a year. And again, with Vahan numbers, you can see how our top line has grown. And manufacturing is all about growing top line, and your input costs don't linearly increase with the top line. The manufacturing factory is the same, etc., etc. So a lot of the costs remain linearly growing, whereas the top line grows very
So would you be able to put a timeline to when the company would be profitable?
No, I don't want to put a timeline to it. I can't do that. But like I said, our growth is allowing us to improve bottom line, like all manufacturing entities end up happening. And so far, we've not even brought our own cell into our vehicle, which is one of the core anchor initiatives to really improve cost in the EV, which will happen, like I said, early next year.
Talking about your sales in a world without FAME subsidies, do you see this number slowing down? And, a lot of people have also been questioning whether the steep discounts that Ola has been offering, whether that has helped propel the kind of numbers that we've seen in the past year, significantly higher than the past years.
See, if you see the FAME, I'll answer your questions in 2 parts. First, the subsidy and then the discounts. If you see the FAME subsidies, they've already come down from, I think, 60,000 rupees a vehicle to 10,000 rupees a vehicle, thereabouts. And the industry has grown. So I think the industry is at a stage where pretty much it's not as dependent on the FAME subsidies. And the government has been very clear that they'll taper down FAME over the next few quarters or so. And we've been in line with that government direction. And we have been focused on building our own supply chain manufacturing technology strength. What you saw today are vertically integrated manufacturing capacity and the large-scale manufacturing capacity, as well as a lot more internal development of technology versus relying on external suppliers. That helps us keep our costs down. I can't put a number on that right now, but as you can imagine, doing more things in-house keeps your costs down, improves your margins. And that helps us be the price leaders in the market. And also, a lot of the reason we are able to build market share and build volumes is the kind of manufacturing scale and the technology depth that we've built.
You know, earlier when you were speaking, you spoke a lot about talent and the importance of retaining good talent. But, you know, from your DRHP again, attrition numbers have been quite high in, you know, late 40s. Now, what are you doing to help retain better talent? Because there's been churn even at the top level in the organization.
So you're right. In DRHP, we had a certain number in the 40-odd%. Now, it's important for your viewers to understand that our business model is a vertically integrated business model. Yeah. On both the back end, which means the manufacturing, etc., we do a lot more component manufacturing ourselves, as well as the front end, where we have a direct-to-customer sales and service model. We don't do dealerships. Yeah. So a lot of the people in sales, we have almost 800-900 stores across the country in small towns and villages, etc. We have service centers of our own. Yeah. So all of those people also form part of our organization in some way. So a lot of the talent you would presume in the junior levels or the field levels.
So you're not concerned about it?
Anish, our focus is to build world-class talent, and in R&D, in corporate functions, leadership functions, we have very strong talent which continues to grow with us. Many people have been with us for years and years. So yeah.
Well, you know, since we're running out of time, you've said this before, it's quite interesting, that Tesla for the West, Ola for the rest. You know, so what next after your two-wheeler? You know, you've already shown us the prototype for your motorcycles. When will we see the four-wheeler?
We're focused on the two-wheeler, Ritu. Scooters already has given us such a strong growth over the last 2 years. And last year, we expanded our portfolio of scooters from the S1 Pro to multiple S1 platform scooters, to go from, let's say, a very premium product like the S1 Pro to a S1X at the entry level. Yeah. Now we are working on the motorbikes. Like you said, we showed you motorbikes 15th August last year. Yeah. Those were early concepts, and we've been working on the R&D of those things. Okay. So through next year, you will see us launch some motorbikes, and I do hope that the consumers love them.
That's the big one the street is awaiting in terms of a listing, the Ola Electric. Get into a break. On the other side, we'll get you a quick weather update. Manisha will be joining in.
Back with us here on Trading Hour, and Manisha Gupta is now joining in to get us the latest weather update. Manisha, good morning. How is the weather looking like now?
Well, you tell me, almost quite good. But let me tell you that the month of June hasn't been so great. From 1st to 28th of June, we've seen 14% below normal rainfall. I mean, the numbers are still updating, but we are looking at a much deficient rainfall here. The only area that has done some positive has been southern India. Apart from that, if you look at northeast, central and northern part and the northwest as well, we are looking at a deficit monsoon. In Mumbai itself, the monsoon has been 35% below normal for the month of June, even as we did see an early onset of monsoon here. Well, if you look at the month of July and August, the anticipation is that you could be looking at a better monsoon because El Nino has eased off, and it's La Nina, which will bring a better month in sense of July and August is the anticipation from the IMD there. Also, when you look at the monsoon overall, it has covered Delhi and various parts of central India and north as well. And the latest IMD report suggests that in next 2 days, the monsoon will cover all over India here. Well, 108% is what the IMD really seems to be putting out, and has reiterated that they are looking at good rainfall for the rest remaining 3 months, and the monsoon could be delayed and withdrawal could come in by the month of October. If you look at the sowing numbers itself, well, that has been a slow start there, but then mostly many of these Kharif crop, the final sowing numbers come in between 15th to 25th of July, and there is still time for that. So that's a number that the street will watch for.
Interesting. Thanks a lot for that, Manisha, with all the latest on the weather and the rainfall deficit in the country so far. But time for a short break. Again, when we return, we'll put the spotlight on Mumbai's housing market as property registrations rise 12% year on year in the month of June. Ghulam Zia of Knight Frank India joins us on the other side.
Mumbai city has recorded 11,569 property registrations in the month of June. This is the highest that we've seen in the last 12 years for the month of June alone. It contributes about 1,000 crore rupees to the state exchequer. Now, according to a report by Knight Frank India, the report stated that compared to same period last year, property registrations in the maximum city have risen by 12% year-on-year, and revenues from the registration have gone up by 17%. To talk more about it, we have Ghulam Zia, Senior Executive Director at Knight Frank India. Ghulam, morning. Rima here. Another phenomenal number, 11,500 crore. It's not at the peak because we've seen registrations crossing even 12,000 in the prior month and even earlier this year, but it's still a very, very big jump, 12% on a year-on-year basis. Give us some, granular detail in terms of the suburbs, in terms of where is it that we are seeing increased, interest, and how is the price movement for all these registrations?
Yes, so starting with the number itself, the number that you spoke about, 11,570 odd units sold. If you compare YOY, last June, as you said, last 12 Junes, we've been seeing this is the best performance in a June. And while month on month, as you again said, that there's a small 2 to 3% of a climb down, but the number itself, a June number, is outstanding. And let's not forget that last month there have been election-related activities as well, which had some impact on registration numbers. So net, these numbers are not to be, just seen with a pinch of salt that we are going to be looking at some outlier, climb down or something. There's nothing like that. The overall weighted averages, the running average last 4-5 months has been very, very good. In fact, half-yearly numbers are far better than what we've seen in 23. So now coming to the specifics of which area as well, the uppermost end, which is the South Mumbai, is still about 7 to 8% of these number of transactions, which still itself is too big. But the western suburbs and central suburbs together constitute almost about 75%, where central suburbs is really taking almost about 38 to 40% of the share. So net, the perspective is clear that a lot of developments are happening in the suburban Mumbai compared to South Mumbai, which in any case is a landlocked area. And even the suburbs that we're talking about, essentially a lot of redevelopment projects are coming up, easing out the land constraint that Mumbai always had. So net, what we are looking at is good number of projects coming along, which is giving rise to the sales shooting up. And as you've been looking at last 3 years, the sales have been consecutively going up. Sorry, back to you.
No, just one word. You said South Mumbai constitutes 7% of the overall volumes. But in terms of value, what does that number stand at and how has it changed? And where is it that prices are going up, even in central suburbs?
The price rise actually is all over the city. It's pretty equal. About 7 to 10% of price rise is what we are looking at. South Mumbai, and again, it depends on the project and the developer. A listed developer, a good developer of repute would be able to get even 10 to 15% increase in price rise annually as well. However, on an average, we would still be cautious about 7 to 8% is what is a weighted average price rise that we would look at all across. Well, South Mumbai, yes, a few of these new projects that have come up are really are causing numbers to move up pretty fast. The price rise in South Mumbai has been huge. So your question, 10% or 6 to 7% of the volumes in terms of number of transactions would mean at least 20 to 24% of value in South Mumbai that we would be looking at.
Ghulam, good morning. Thank you for joining in. For most of the salaried individuals like us, the only question that comes to our mind is what kind of pricing trends are you witnessing right now? With considering the number of registrations that we have been witnessing in the city so far, it does not seem like a price correction is in the offing anytime soon. But do you see a trend anytime, say in the next 6-8 months, that demand or supply will finally outstretch demand and then you might see a resultant price correction in the city or pan-India as well?
Well, to start with Mumbai, the demand supply situation is not going to change so soon. As we have always seen, getting new land in Mumbai is the biggest challenge. So the new launches that are happening are almost in tandem with the kind of transactions that we are watching, and when we look at velocity of sales of individual projects or time required to sell the remaining inventory also, these numbers are very, very well within, on the developer side. Even now we are not looking at more than 8 to 9 quarters, which means not more than 2.5 to 3 years to sell whatever inventory is in the market today. And at the same time, if you look at the time to complete, could be at least 3 to 4 years. So which means that the developers are selling their wares even before they are completing their projects. And that shall continue to continue sometime, at least in Mumbai. The rest of the country, the trend would vary from place to place. In a few places, like I want to believe in Bengaluru, we are actually reaching that stage where new supplies are slightly higher than the sales. And so is the case in Hyderabad. But even in Delhi NCR, we have to bifurcate. The Gurgaon market is going to be behaving differently than the UP side market. UP side market is again reaching that stage where number of new launches would be slightly outstripping the number of sales. But in Gurgaon, you are still again, while numbers in last couple of months have been slightly slower in terms of transactions. But if you look at the rolling averages about last 6 to 8 months, you would once again see, even in Gurgaon, there is no way that in next couple of quarters we shall see the trends changing. So net, empathizing with your perspective, that price rise would continue, may not see any change. The change of the turn of the situation may not happen for next 2 to 3 quarters.
Do you have company-wise detail, developer-wise details? Because there are quite a few, prominent players in Mumbai. You've got Lodha, Rustom G, Prestige now, Godrej Properties. Any details on the developer-wise details and how they've performed in June and in the first half of the year?
Well, just talking about the listed players or the reputed players, a point which I tried to raise a little while back. These were the products coming from listed players and reputed players are going off very fast. And that's something which continued even in last 2 quarters. All the listed players have seen people queuing up for their properties to be sold. And that continues, especially in Mumbai. The demand for such properties is much higher because while listed players have very few projects in western side, and especially Mumbai, the demand for such projects has been very high. All over the country as well, the demand for the listed players and the reputed developers projects is very, very high. So no dearth of demand in that area.
Gulam, your last answer was not something that any aspiring home buyer would want to listen to. But I was looking through the the area-wise breakup of your apartment sales, and you're seeing this trend that this up to 500 square feet, the percentage there has gone down from 41% to 36%. And the higher square foot areas, the higher carpet area, the percentage is increasing on that side. So isn't this trend being ongoing right from COVID times, that the apartment size, people wanting to buy larger apartments, is a trend that has been ongoing and is likely to continue going forward, and that share of the up to 500 square feet would fall even further?
Well, here we need to really look at the backdrop for this entire thing. First of all, it remains a fact that low end of the market is not selling as good. But the reason behind that is not enough of inventory is coming at the lower end of the market. And that's exactly so. The only reason is that, while on the other side, affordabilities, etc., were a question. But then, we are expecting the first 100 days target for the new government, that they will give huge incentives for the home loan buyers of affordable housing. About 70 to 75,000 crore has been set aside to give them some incentive, at least about 150 to 200 bips on their home loan waiver, something which is expected to hit us soon, which will turn the situation for the lower end of the market. But net, the biggest problem for affordable housing is that not many developers are keen to cater to that market. The reason is simple. You have huge sales velocities happening in the upper end of the market. Your margins are much better. So developers don't have much of an incentive to cater to the lower end of the market. And that is what is troubling the lowest end. So the observation that you have, especially in Mumbai, by the way, let me tell you, while we want to look at Mumbai as one of the most unaffordable markets, but the share of affordable housing sales in Mumbai has been the highest compared to all the rest of the 6-7 top cities. So which is very awkward to know. But then again, Mumbai has been a market which is surrounded by those far off areas of Vasai Virar, Kalyan, Dombivli, where a lot of affordable housing is coming up. But net situation is, the same, that the affordable housing is suffering and the mid to upper end housing is doing exceedingly well in last couple of years.
Okay, thank you, Ghulam, for joining in with that quick update. We need to slip into a very short break. We'll come back and discuss market technicals. Jay Thakkar of ICICI Securities joins in with his top trading bet. Stay tuned.
Welcome back. The market seems to have picked up a bit of pace. The Nifty is now heading towards 24,100 and a couple of index heavyweights are putting their hand up as we speak. TCS is one of them, with IT being in focus, as Reema has been highlighting all through the show, and the other one being Hindustan Unilever, and that is the stock that is now trading at the highest point of the day, up 1.5%. And after the top three IT stocks, the other top gainer today is Hindustan Unilever, now back above the mark of 2,500 as we speak. But some of the other movers in today's session, one of which is PVR, and the stock is surging after the movie Kalki recorded strong box office collections, becoming the highest grossing film of 2024 in only 3 days. Vamakshi is here with more details. Vamakshi, I'm not sure whether you've seen the movie or not, but a lot of people are definitely watching it.
Well, absolutely, Hormas. I think I will be catching up with the movie later this weekend. Absolutely, you know, it's been a blockbuster weekend for Kalki 2898 AD, and it is expected to be a blockbuster trading day for PVR Inox. And that is because, like you rightly pointed out, Kalki has become 2024's highest grossing Indian film in only 3 days. In fact, total net India box office revenue stood at 302 crores as per Nuvama, with the company getting a box office collection of almost 95 crores on the first day itself. In fact, not just Kalki 2898, but there's a strong pipeline of films ahead as well, and this is coming in after 7 lackluster quarters for the entire film industry. In fact, upcoming films include the likes of Sarfira, Pushpa 2, The Rule and Stree 2, which are expected to be released in July and August. Apart from that, Hollywood content is also making a comeback after settlement of writers' strike. We have a couple of films lined up: Despicable Me 4, Fly Me to the Moon, Deadpool and Wolverine and Transformers 1. So definitely it looks like a strong pipeline going ahead, and this in fact bodes quite well for PVR Inox. But apart from that, there are several other triggers that are lined up. Ad revenue growth is expected to sustain over medium term. In fact, the company says that the ad revenue could reach the pre-COVID absolute level in FY25. They're also taking up several cost control initiatives, and these initiatives could actually bear fruit in the medium term. They are prudent with screen additions. They're also shutting down unprofitable screens. But apart from that, they're also focusing on debt reduction. They're trying to be a net debt-free company. They are directing their free cash flows mainly towards debt repayment. They also have a land parcel worth almost 300 to 400 crores, which they could look to monetize in order to pay down debt. But apart from that, they're also focusing on premiumization of their portfolio. Currently, premium screens account for nearly 14% of their portfolio, and this is expected to rise to 20%. And naturally, premium screens generally have better margins. So this again bodes well for PVR Inox. So overall, it looks like a good setup, not only in the medium term, but also in the long term for the company. But on the back of that, we have a couple of brokerages. Nuvama as well as MK both have a buy rating on this counter. For Nuvama, the target price is 1,995, while for MK, the target price is at 1,650 per share.
Thank you very much for that. Coachn Shipyard and Garden Reach Shipbuilders are also surging in trade on the back of some order wins, partnerships, tie-ups. Upasana gets us the latest details. Upasana.
Thanks so much for that. First up, let me start with Coachn Shipyard. The company sees significant export orders. Udupi Coachn Shipyard, which is a wholly owned subsidiary of the company, secures additional orders from Wilson ASA, Norway. The contract involves designing and building 4 dry cargo vessels with an agreement for 4 or more by September 2024. These will be diesel-electric vessels built for transporting general cargo in European coastal waters, and the project value is around 1,100 crores, and it is expected to be completed by September 2028. Mind you, last month the company had indicated that it is expecting very strong traction for export orders, especially from the European region. Next up is Garden Reach Shipbuilders. The export order momentum continues as company backs contract worth $21 million for construction of advanced ocean-going tug for Bangladesh government. and this project will be executed in 24 months. Let us see the recent export order wins that the company has seen last month, that is in June 2024. Company had signed another contract with Bangladesh for delivery of TSH dredger and had also entered into a contract with German company for the delivery of at least 4 multi-purpose cargo vessels with a contract value of almost $54 million. Hence, Garden Reach shipbuilders will also be in focus on the back of gaining export momentum.
Thank you very much for that. Jay Thakur, as promised, is with us now from ICICI Securities for a quick technical check on the markets. Jay, morning. Almost in the cusp of 24,100, approaching a 100-point gain on the Nifty. Your thoughts on the morning so far? What are the key trends you've seen, observed, and what would your stock recommendations be?
Hi, very good morning to you, Rima. Congratulations to you, entire team of CNBC-TV18 and all the viewers of TV18 as well on India winning the World Cup. I mean, it was amazing weekend, and it's a good start to the markets as well. I would say, Rima, Nifty has recovered quite well from the lower end of the day, and I think that 24,000 on an immediate basis, Rima, till those levels are held, Nifty overall trend will be positive on the upside. I mean, the immediate target would be 24,200, and above those levels, yes, if it sustains, then it can inch towards 24,400, 500 levels as well for this weekly expiry. So I believe that in the short term, 24,000 range, 24,000 is going to act as a very crucial support. And below that, 23,800. The overall trend is likely to be positive, even in Bank Nifty, wherein I think that 53,000 definitely for this weekly expiry, Rima, is likely to be the hurdle, but then 52,000 is a crucial support. So Bank Nifty may just consolidate within this 52,000, 53,000 range. And Nifty, we have seen that heavyweights are really supporting, and hence it's likely to be trending higher only. So I have two buy recommendations, Rima, one from the large cap, one from the mid cap. The first buy recommendation is on TCS. I mean, we are seeing that Nifty IT is back quite strong now. I mean, many stocks, mid cap, have been forming new highs, and large cap stocks like TCS and Wipro are also back into the momentum. TCS currently trading around the levels of 39.73. One can buy this, placing a stop loss originally below 3900, and one can target 4150 to 4,200 going forward. These would be the two short-term targets. I think TCS is likely to form a lifetime high again now. And a second buy recommendation is on Chambal Fertilizer. I mean, we have seen a good long build-up here, and we saw some profit booking coming in, Rima. But then I think the overall cycle has been trending higher for Chambal Fertilizer, at least for the July series. I think the stock is likely to head towards the levels of 550 on the lower side. Now 505 will act as a very crucial support. So the risk reward is quite in favor of the bulls. So Chambal Fertilizers, we have seen a long cycle started on the futures side, and TCS, we have seen a good short covering coming in. But then we are seeing some good long build-up happening from today onwards.
Jay, thanks a lot for joining in, sharing with us your views on the index and specific stocks as well. Time for a short break. Fundamentals of the market up on the other side. Madan Gopal Ramu of Sundaram Alternate Assets joins us on the other side. Stay tuned. We'll be right back. Welcome back, and as promised, Madan Gopal Ramu from Sundaram Alternate Assets is joining us now to discuss market fundamentals. Madan Gopal, good morning. Thank you for joining in. I'd want to start off with IT because that seems to be the sector of the day today. There's a bit of a double upgrade coming in for Wipro as well this morning with ahead of the earnings season. Accenture's results also was a bit of a positive rub-off on the sector as well. But what kind of a quarter are you anticipating this time around for these IT companies, Madan Gopal? Because the situation on ground does not seem to have changed, evident from the commentary from a lot of these companies.
Yeah, I think IT sector is in, probably you have to look at the other way. The downgrade cycle is done with IT sector with the kind of order flow they have seen and the discretionary spending picking up momentum in the second half. I think some bit of underweight positions people will try to narrow it down or even take it to equal weight positions. And even we have done that. We are particularly interested in the IT mid-cap space, companies focused on ER&D, because we feel that the structural growth that is happening globally on the AI space, it's better to be played with some of the mid-cap names in the IT sector in India. So we feel that in the current valuations, the downgrade cycle is coming to an end, and hopefully second half likely to be better. It's time to kind of fill in some of these stocks. That's the view that we carry at this point of time. Large cap IT sectors, I think they will disappoint from a growth perspective. Even there, the downgrade cycle might be done, but I think even the best case, you might look at a 10% sort of an earnings growth. But some of these mid-cap IT names can give you a 15 to 20% growth. And if you can get them at the right valuations, then I think they can give you a good return from a year perspective, in our opinion.
Okay, it's just that IT has gone up 6-7% in the last 1 month itself. But, I was looking at some of your portfolios that you manage, and one stock you appear to be very bullish is Hindalco, because that's been a stock that you've added on to your positions in May. Can you tell us the reasons behind that? And is this a long-term call, or is it just we're in a cycle and therefore it's a bit of a tactical one-year call?
Metals, we have added one position, that is exactly what you mentioned, the Hindalco. What we are seeing globally is the demand for non-ferrous metals is improving. The outlook is improving given the spending that is happening in the power transmission space. Also, the demand from data centers and electric vehicle market. The demand for non-ferrous metal, particularly aluminium and copper, is likely to stay stronger. And the interesting point is, by next year, China will hit the cap on most of its capacity. And if China does not add any capacity, then there could be a period where you will see the aluminium prices and copper prices can strengthen further and can be structurally going up from there until the new leg of capex happens. Probably it can happen in India or in Latin countries or in somewhere in East Asian countries. But it could provide a period of 2-3 years where the metal prices, particularly non-ferrous metals, can look stronger. And these metals play on the emerging sectors, which are seeing investments globally. And that is the reason we have gone into Hindalco. Valuations are very attractive for Hindalco. The recent earnings numbers suggest that there is an earnings upgrade cycle for Hindalco, even without the metal prices going up. So if metal prices further go up from here, it's a bonus for us. So that's the reason for getting into, but that's a small portion of the which we have added in the metal space. So that's what view we have on the metal space.
Madan Gopal, a very interesting name that you have added recently is Amara Raja, and that stock has already doubled in 2024 already within the first 6 months. Now, given the fact that the stock has seen this kind of a run up, and to take a bet on it after it's gone up 100%, which means that you see that there is scope for further upside, say towards the second half of the year and also for the next 2, 3, 4 years as well. What's your call there?
Absolutely. I think electric vehicle penetration in India is likely to be better than what is being estimated at this point of time, given the affordability of electric vehicle batteries have improved meaningfully in the last 6 months or so. We actually taken a position on Exide as well, and we talked about it in our previous episodes also. We feel that the electric vehicle penetration in India will be much better than what Street is expecting at this point. And we are talking about capacities coming up in India to the tune of around 6 gigawatt to 12 gigawatt for Amara Raja and Exide. Just if you look at the global scale of what China is doing in this space, they are almost reaching 3,000 gigawatt by end of this year. And if you look at with the help of Chinese, not just Indians, I think Europeans and even Latin countries are adding huge capacity. If I take some of the comparable countries globally with a very similar sort of income levels, they are all talking about 25-30 gigawatt of capacity addition. So we are talking about very small number at this point of time in case of Exide and Amara Raja. We clearly see in next 10 years, the number that we talk about in terms of capacity in electric vehicle batteries can be substantially higher than what we are thinking at this point of time. This is a structural story until the electric vehicle battery prices remain low, which are already low, and further learning curve can happen and keep them low or even bring them down from here. I think it's better to be played with the quality names like Exide and Amara Raja. They have very good balance sheet. They have very good ROCE in the existing business. They have very good market cap at this point of time, which they can dilute to put in money more into the space. and they can look at a reasonable somewhere between 15-20% ROCE in that business. I think put together all this and the current valuation of Amara around 25 times 1 year forward, it's the cheapest stock among the quality mid-cap auto names. I think it makes more sense to be positive on this in these from next 2-3 year perspective as well.
Okay, in that same emerging leadership fund, you've also initiated positions in PB Fintech. Again, this is a stock which has done very well, 85% return year to date. In the last 1 year, it's more than doubled. How much more upside do you see in PB Fintech? And have you accumulated enough, or are you still looking to add? If someone's doesn't have a position in PB Fintech, is the stock still attractive?
Actually, we added it some time back, and some from where we added it has already given some returns. But what is important to keep in mind in these kind of stories, again, the philosophy with which most of our stock picks are happening at this point is the value migration. I think most of the value migration in insurance companies will move away from the traditional insurance manufacturers to the distributors, and particularly the e-commerce distributors. If you look at what is happening in PB Fintech, it initially used to be a story on protection, selling protection insurance products. Today, they are very strong in health products also. We feel that these two put together can enable PB Fintech to continuously grow in high teens, and it can also enable PB Fintech to improve upon the margins, which are right now not being discounted. So it's a very good compounding story. These are not traditional low teen compounding stories. These are high teen compounding stories. Valuation, I won't say it's super rich. It's reasonable for the kind of growth that this company can deliver. I think execution is key. So we have played very similar stories in the tech platform names like Zomato. All these companies are right now getting the benefit of value migration that is happening from the traditional businesses in the same space. And a lot of this profit pool is shifting to these guys. And in that framework, I think PB Fintech makes a lot of sense to buy in and hold on. Don't expect doubling of returns in these stocks. These are going to be 20% compounding stories, and managements which are executing their plans in an impeccable way. That is the story behind PB Fintech.
Madan Gopal Ramu, pleasure as always. Thanks a lot for joining in and sharing with us your views on the sectors and specific stocks that you like. Madan Gopal Ramu there of Sundaram Alternate Assets. Time for a short break. Up next, a corporate conversation. Vimal Kejriwal, the MD and CEO at KEC International, joins us on the other side to discuss the recent order wins and the road ahead for the company. Stay tuned.
Welcome back. KEC International is in focus. The company last week secured new orders worth 1,025 crore rupees in the T&D and cable businesses. Not just that, today there is a note by MK on all the EPC players, where they say that it's the golden decade for EPC players. They expect a multifold increase in budgetary capex, the development of roadmaps, the National Railway Plan, streamlined financing arrangements which will facilitate funding, robust capex in infra, power, T&D, hydrocarbons, all boost the growth for Indian EPC players. And one of the beneficiaries of this could be KEC International. That's the note which has come out from MK earlier today. Vimal Kejriwal, the MD and CEO at KEC International, is with us on the show. Sir, thank you very much for joining in. Just a quick word first about this 1,000 crore order that you won last week. What does this take your order book to? And what's in the pipeline in the next 6 months now that the election-related uncertainty is out of the way and we should expect policy continuity?
Rima, good morning. I think our order book with this order is roughly slightly above 30,000 crores, and we have L1 of more than 8,000 crores. So it's almost, I'll say, 38,000 crores is what we can say the order book.
Okay, and in the pipeline...
As far as your... Sorry. Yeah, go ahead.
No, I just wanted to know the pipeline.
So pipeline, as I said, one is we have an L1 of 8,000 crores now that elections are over. So I think most of our government clients are taking their board approvals, etc. So we should start seeing more orders coming in, more of the L1s getting translated. And as far as the pipeline is concerned, our overall pipeline today is around 1,35,000 crores. Some of which are already tendered out and quoted, which we are not, results are not yet out, and others to be quoted in the next, I'll say 1 or 2 months. Broadly, if you look at the breakup, almost 40-45% of this 130,000 is in the transmission between India and international, and the rest is between civil, railways, and solar.
Mr. Kejriwal, good morning. Thank you for joining in. Do you expect this trend of transmission to drive a major portion of your orders as well? So you mentioned that you are L1 for another 8,000 crores. Which segment is the one that is leading that 8,000 crores?
So if you look at the numbers, the Hormuz, then almost 90% is T&D. Okay. But not only India, it is also international and ASEI, but a large portion is India. And there are a lot more tenders which we have quoted in the India T&D, which we expect to see the results. So clearly, India T&D is definitely going to be the leading driver of our revenue and all that this year, and maybe for next couple of years also.
You said all the government bodies are now quickly, going to their board to take approvals to start the ordering process or execution process, right?
They are going into start let's say, awarding process. See, most of these tenders have already been quoted. In many cases, they were opened before the elections, but I think because of the restrictions, people did not want to take the chance of giving the awards. So, like this one, we already have one power grid order where they got the approval, so they have already released it. And we got some railway orders earlier last week also, a week before that. So I think slowly these orders are going to their boards and getting awarded. The tendering process had not actually stopped, but many of them had not opened orders or the tenders, etc., which should now happen. So I think in the Q2, you will see a lot more ordering happening than what we had seen in Q1.
Do you have a guidance or an expectation for the kind of order wins we could see in in the second half of the year?
We don't have exactly for the second half, but for the year we had said we should be doing around 25,000 crores. And we have now announced with this, it's been around 4,000. So 21,000 is a balance for next 3 quarters, if I can say.
Mr. Kejriwal, I wanted to talk to you about this underground cabling project, which is there in West Africa, which is around a 225 kilovolt project, if I'm not wrong. Now, considering the geopolitical landscape over there currently, do you see any hindrance to the development of that project? What are you hearing from the ground over there?
So, we have been working in various countries in West Africa as well as in East Africa also. So this is in a country where it's relatively quite okay, and we have been very, very conscious on the geopolitical risk when we take projects. And this is not just underground; it's actually a mix of a cabling, a substation, and transmission line put together, and it's multilateral funded. I think we are very comfortable with the project.
Even solar is expected to be a big growth driver. I think you'd spoken about it in your investor analyst meet. Can you detail out your expectation and plans and how you plan to grow that business?
Sorry, which one did you talk about? I missed the
solar.
First one. Solar, yeah. So solar, we have bid for some large projects and we are bidding for some more. In fact, our L1 does have one solar. So, we expect that with the government emphasis on power supply, and especially on the renewable side, we will get some more projects. See, what was keeping us back was the contractual terms and all that, where a lot of liabilities were getting shifted onto the EPC, and also the module pricing volatility. Now, I think most of the large developers have realized this issue, and so now the contracts are, I'll say, evenly balanced between the developers and the EPC, because of which I think we are very hopeful that this business will definitely grow.
To quantify that, Mr. Kejriwal, you're expecting around 25,000 crore this year. How much of that would be solar?
Solar, I think, is roughly around, I don't have the exact number, but renewables was around 8 to 10% of this.
All right, Mr. Kejriwal, thanks a lot for joining in, sharing with us your views on the recent order wins and the road ahead as well for KEC International. Thanks a lot for joining in. Wish you good luck for the rest of the year. That was KEC International there, the management sharing views on the road ahead. But we call time on this edition of Trading Hour as we continue to sink in this feeling of India being crowned world champions after the landmark win in Barbados on Saturday night. From Rima, me and the team that put this show together, thank you so much for watching. Halftime Report comes up next.